Right, staying with economic news now, the 4th SA Investment Conference will be held in person this year on the 24th of March at the Sandton Convention Centre. Now, the theme for this year's conference is Unlocking Investment for Growth and Job Creation. For more on this, for more expectations from this year's conference, we're now joined by Trudi Makhaya, Economic Advisor to the President. Trudi, thank you so much for your time this afternoon.
Thank you, and good afternoon to your viewers.
Trudi, now at the time of going to the second investment conference in 2019, of course that was before COVID-19 hit, before the July 2021 unrest, President Cyril Ramaphosa wanted $100 billion investment over a period of about 5 years. Talk to us about this year's investment conference and what the vision is given the current economic and socio-economic climate in this country.
So the vision is to keep emphasizing the importance of creating productive capacity in the South African economy, both by domestic investors and by international investors. I think we saw during the pandemic when there was a lot of vaccine hoarding and strains in the supply chain, how we benefited from having a local supplier of vaccines on our shores. Aspen was one of the companies that actually made a pledge in 2018 to expand their plant, and that came in to be very useful through challenges like this. So the message is the same, that especially in times of crisis, you need to encourage investment, you need to ensure that you have productive capacity in key sectors. Now, in terms of investments that have been pledged to date, we've seen commitments of over 776 billion over the past 3 conferences. So we're on track in terms of the target that was set by the president, but we're also mindful of the damage, the real damage to the economy that's been caused by the pandemic and the unrest, and that we really need to redouble our efforts in terms of reaching even higher investment targets than were on the table.
Now, just talking about the unrest and some volatility in the market, let's look now at what's happening currently in the Ukraine. I'll go back to the conference in a moment. Just looking at this current conflict, how will it affect the global economy? I mean, what is South Africa doing to ensure that the impact is minimum? We're just looking at the Brent crude oil prices at the moment. They are continuing to rise unabated.
So it's going to create strains in the global economy. It is unfortunate that at a time when we should be recovering from the pandemic, we have a challenge like this. As a small emerging economy, there really isn't much we can do to try to sway prices or even to try to sway some of the economic measures that are in place. We just have to ensure resilience in terms of our economy, once again emphasizing why it's important to have significant productive capacity in your local economy. We have to work on our localization strategies, which have been part of the economic reconstruction and recovery plan, precisely because at moments like this, supply chains come under strain and you really see where the challenges are. Of course, you can't produce everything within a country. Trade is important, and we are exporters. So we will see strains. I think on the geopolitical front, we've consistently kept on the message that we want to see a peaceful resolution to this crisis and to the easing of these tensions so that we don't have unnecessary conflict and unnecessary and tragic loss of life.
Now, just going back to the business of the day, in as far as the investment conference is concerned, happening in just a couple of weeks. I know that you mentioned, of course, what your vision is, and you've briefly touched on the July unrest. But having just taken that into consideration, are you confident that this time around that this conference will be a success? Of course, following the unrest and other volatilities. I guess also at the center of this, there's a time where South Africans want to see some form of seriousness as it pertains to convictions as a result of the escalating corruption that we have seen in this country, particularly when we start mentioning the Zondo, Commission. and its report and its findings. So the question then is, how do we go out and seek funding when some of the pertinent things are not done back home, in as far as making sure that those who continue, to loot and to advance the scale of corruption that we've seen, so that investors are attracted, and that won't be a deterrent, especially sans these convictions that I've just been talking about.
I mean, we have seen some convictions on corruption, I think, over a period of time. Perhaps there's a feeling that they're not significant, but certainly when it comes to investigations around procurement, in various provinces, we've seen arrests. And in terms of the conference, I think one of the things that we try to show as we present the investment story is that a government is doing its part in terms of reforms to the economic environment. So the usual reforms in terms of lowering transaction costs, dealing with the just transition and energy security. But also, I think you rightly point out, we now have to also tell the story in terms of security. We've had many investors in the affected provinces that we've had to work with, both South African and international companies, where there's had to be concentrated engagement with them to try to work with them through the security challenges, safety and security that they face. So unfortunately, it is going to have to be a more prominent part of our messaging as we go out in the world, to say that there have been new appointments in the security cluster. There's a new strategy focusing on crimes and sabotage against infrastructure. There are task teams that have been set up to look at sabotage, for instance, of rail and other key economic infrastructure. There's work around the export of scrap metal to try and disincentivize people from trying to steal and dismantle scrap for that purpose. So we're going to have to highlight all of these initiatives that we're taking to ensure that the security environment is stabilized, acknowledging that indeed in recent times we've seen the gaps, and those gaps have to be closed. And I think the president has spoken repeatedly on those reforms to the security cluster itself, and also a renewed energy in terms of strengthening the intelligence framework in the country, and also expediting prosecutions, obviously by the relevant independent authorities. So I agree, it's unfortunate that we've come to now have to also tell that story, but I think we have enough to assure investors that we're working on it.
Another story that's probably very difficult to tell from a South African point of view, especially coming out of that financial, budget that we've just seen, where SOEs are now not getting a bailout. The big question is the electricity grid, particularly Eskom. How do you then start to begin telling a South African story that does not consist of a failing, facility or utility that's struggling to maintain that electricity grid? I mean, we know, for instance, in 2020, that a total of about 50 companies pledged billions of rands, I think close to 110 billion at the time, at the third annual South African Investment Conference. To what extent do you think you will struggle to tell the story of Eskom and still be attracting those investors?
I think the story of energy does require some patience in the short term, but it's clear from Eskom's own plans that they understand that the maintenance of their plant and also improving operational excellence is going to have to be at the top. They have strategies in place to increase the energy availability factor, to keep the plants on, keep them operational, and they will be held to account in achieving those targets. So there's the operational part that is being looked at, but also opening up the market to other providers of energy. We've had a long-standing renewable energy program for some time now. We've also clarified that self-generation under 100 megawatts does not require onerous licensing anymore, and that many companies are taking up this opportunity to self-generate and to meet their own needs, and also meet their own needs according to their own commitments of net zero. So I think we're happy that the environment is coming together to say, A, Eskom has to sort out its internal challenges. B, the electricity supply industry has to be opened up and freed up to have multiple sources and to ensure that we have security of supply, and also that companies are able to have flexibility in how they meet their energy needs. So I think, along those lines, we can say that in, the near future, we will put the challenges that we're facing behind us. But of course, in the short term, it's not going to be overnight that the operational issues at Eskom are fixed, or for new capacity to come on stream. So there might be some strain, but there's a clear long-term picture that speaks to energy security.
As we begin to talk about, the Ukraine-Russia crisis and just the impact that it is having, I have just recently spoken to an economist who was telling us about just some of the opportunities that South Africa has found itself in, with this kind of crisis, which is unfortunate in one part, but also, of course, something that investors are grateful for. Now, as we know, in every situation, there are opportunities. So are we as a country looking at how to use the commodity boom as an example that we are experiencing to address the negative impact on this particular conflict on the economy?
Yeah, of course it has pros and cons in terms of the conflict, but certainly the overriding objective is to see the end to the conflict. The commodity boom has been, playing out over the past few months, probably even a year or so by now. It's really helped us in terms of the budget, being able to meet the needs of the July unrest, increasing the period over which the social grant for the unemployed is available. And we've been able to do that without raising taxes, without significantly raising our debt. So that certainly helped. I think we have to be careful because in the past, commodity booms have also come to an end. So we have to make sure that we spend wisely, that it contributes to reducing our debt burden, and also to financing economic development, but also that we look at all other opportunities across the board, including opportunities where mining and commodities can contribute to the green economy, but also to the digital economy. And so positioning us for greater value addition along those value chains. So using platinum effectively in terms of the hydrogen economy and fuel cells, thinking about producing technological components in South Africa using our own commodities. So I think it's important to take advantage of the boom and sell commodities as they are, but also be mindful of the need for beneficiation and for a much more diverse economy.
I would imagine as we wrap up this interview and as we switch gears just a little bit, you touched on a number of things in terms of efficiency and also spending wisely and be mindful of where you invest. I'd like us to now talk about just you giving us a little bit of clarity on what was supposed to be the first made in Africa smartphone, the Miraphone investment. We understand at the moment that it did close factory in Durban. If you can just confirm this. I mean, this is, of course, despite the 100 million rands tax break and also the government preference. So
it's unfortunate what's happened with Mara, but I think one expects that some investments will not be able to make it. The company has, said its part in the media in terms of how they've experienced challenges in the pandemic. I can't speak to that. All I can say is that whenever companies hit problems, we try to work with them in as far as it's possible, particularly if those challenges are related to policy. But if those challenges are related to market demand and consumer acceptance of products, there's almost nothing that government can do from that perspective. In this particular investment, there's a local bank that's made its investment, and they'll deal with it accordingly. But we also have the IDC, which is a state funder, which has made an investment. And as far as I understand, they're trying to help an orderly unwinding of the business and also helping to look for alternative shareholders or buyers who might be interested in the business. in line with the agreements that they would have had when they offer financing. There'll always be clauses around what happens if debt can't be repaid, or if it's clear that the business will never be in a position to ever repay that debt. And I believe those processes are underway. For the private bank, I really can't speak, but I think overall, due diligence was done. But, as it happens, some investments just don't work out.
Yeah, one of those unfortunate situations. Trudi, thank you so much for your time this afternoon. We really do appreciate it.
Thank you.
Trudi Makhaya, economic advisor to the president, talking to us there about the 4th SA Investment Conference. Of course, this will be taking place on the 24th of March at the Sandton Convention Centre.